It's hard to argue that we are in a recession at this point. The stock market is down over 10,000 points since February. States are being completely shut down and not allowing people out of their homes unless it's for essential needs. So that means that jobs are being lost, and it's just a ripple effect, right? But there are opportunities that you may want to consider getting yourself into from an investment standpoint. And so I'm coming up with the 5 stocks that you may want to consider buying right now in the middle of a recession, and looking forward to moving out of that recession so that you can make some serious cash on these investments. All that and more coming up. What's going on, everybody? Yes, so it is a crazy time in the stock market, right? And that is what this channel has been designed for. That's why we dedicated this channel and called it Own the Chaos. The stock market is a crazy and chaotic place, and I've made it my mission to help you own it. So if you want to see more content like this, if you want to learn how to take the bull by the horns, no pun intended, and learn how to invest and trade in the stock market, now has never been a better time. If you can figure out how to trade in this market, you can figure out how to trade in any market. So like this video if you get value out of this. I certainly would appreciate it. And let's get on to today's topic. So the 5 stocks that I'm watching throughout this recession period and looking to hold as we come out of the recession, I think are going to be really good opportunities because of the situations that they have been put in. And so I'm going to start off with Amazon. Now, Amazon hasn't been able to keep up with demand from its consumers for a lot of reasons. People have been forced to buy products from home, as a lot of people can't even go out of the house, or maybe they're too afraid to come out of the house for a lot of good reason, obviously. But huge demand has been put on Amazon at this point, and it only continues to grow every single day. Amazon Prime Pantry division had to announce it would not take new orders for the time being, as it attempted to restock its own supplies and fulfill existing orders. Now, on the surface, that might seem like it is a negative and that people may be shy away from that because they've had to shut down operations temporarily. But considering the amount of demand that they've had to endure, looking at Amazon and saying, okay, they're shutting themselves down so that they can replenish and then be able to sell even more. Reports are coming in that Amazon would need to hire 100,000 new employees to keep up with demand. This means that once people are allowed out of their homes, that Amazon is going to go on a serious hiring spree, so that the demand is only going to increase from where we are today. So as demand is increasing, and once people are going to be allowed out of their homes, this is what's going to really kind of propel Amazon to the next level. I think we see a nice move over $2,000 on Amazon sooner rather than later. And I would look for a really strong support around $1,600. So if we come over to WeTrade HQ, looking here at the chart, and if you were able to tune into my Stock Watch Sunday episode, my live stream, where I go live with everybody at 8:30 p.m. Eastern time every single Sunday, you guys would have known that I really like Amazon sitting here at a support at 1627. So looking at this support here, this is where I would look for an opportunity to buy Amazon. Right now, as of this recording, it looks as if it's trading right around 1850. So if it comes back down to this 1627 area, that would definitely be a solid buy zone for me as far as looking to hold on to Amazon for a move up over $2,000. So on to the next one, and that is going to be Uber. And this might come as a shock to a lot of people. Why Uber? People aren't going to be willing to get in the cars with strangers that potentially have been infected. And I would say that, yes, on the surface, again, you're looking at the short term. The long term here, we're looking for things that are going to be coming out of the recession. Companies that are set up to do well after people are allowed out of their homes again. And Uber is going to be one of those that I definitely would take a look at. Recently, the CEO told investors that the company is well positioned to weather this crisis to emerge even stronger, and even goes on to note that rides are down between 60 and 70% in markets like Seattle, the hotbeds that have the highest infection rates and have been hard hit by the virus. Having said all that, he also pointed out the company had $10 billion in cash, and at the end of February has a $2 billion credit line, and none of its $5.7 billion billion of debt is due until 2023. So by that time, all of these issues that we're experiencing right now will be well in the rearview mirror. And so I think that Uber is definitely primed to make a nice move, especially when you consider the stock has dropped 45% since February 6th, all the way down to the $13 range from its highs close to $50 per share. So I would say that Uber is definitely almost too low down here, or it's just too cheap. The price that it's at right now is a little bit of a joke. They're well prepared to sustain through this time of crisis, and I think that's definitely going to be a good one to get into. Now, a lot of you guys might be saying, well, you put out videos before that you weren't really all that big on Uber for the long term, and I'm still on the fence about it, but I think at this point in time, if you're looking at Uber from a 5-year standpoint, I think that they're definitely primed to make a much stronger move, and the price point that they're at right now is just way too cheap. I thought that getting them to the $50 range and even projections that would get them over $100 per share was a little bit far-fetched, but now things have changed, right? The landscape has changed, and the stock is just way underpriced at this point in time. I think it belongs back over $30 a share, and I think that if you can get in at this low $20 range or even back into the teens as it continues to go back down, I would say that it would be really too cheap not to at least grab some for your portfolio. Now, this next stock that I want to talk to you about is going to be more of a sector, but I decided to choose Walmart because of the announcements that Walmart has come out with and what they've been telling the public here. But I would also like you to consider possibly Costco in the same vein. If you're looking at stores similar to a Walmart, ones that are remaining open during this time of crisis, these are definitely ones you're going to want to take a look at, especially because Costco offers a really good dividend. So I would definitely keep that on your watch list too, and maybe make some considerations there. We're going to be talking about Walmart because Walmart is planning to hire 150,000 workers through the end of May amid increased demand during our time of crisis. And if you guys have been watching TV or social media at all, you've been seeing that there have been empty shelves at Walmarts all across America, and this just means that sales are going through the roof. Demand is at an all-time high, and so looking at this, they're hiring 150,000 workers. That is a ton of jobs that Walmart is looking to fill positions on, and so I think this is definitely a good thing for Walmart coming out of a recession. Walmart's also going to reward existing employees for keeping stores open. Each full-time employee will get $300 bonuses, and a part-time employees will get $150 bonuses. Now, I've never been a big fan of the Waltons or the way that Walmart does business, or really the way that it treats its employees, and this isn't going to be any kind of a substantial amount that's going to change someone's life, but I think it's definitely a good gesture for Walmart to be like, hey, listen, we get what's going on here. We appreciate you, and thank you so much for essentially your life on the line for us and for keeping the stores open and for other people who really need the goods to keep their house running. And from a fundamental standpoint, it really just makes a ton of sense. When you're looking at all of the economy and you're looking at all the business that are closing their doors, Walmart is one of the few that is staying open, which means that they are still generating revenue, which means that they are still conducting business as usual. So when everything else is moving down, even if you see Walmart move down, that to me screams area of opportunity, because nothing's changing with Walmart. Their sales aren't really decreasing all that much because they are one of the few institutions that are staying open. So people have to go to Walmart to get what it is that they need, especially if whatever it is that they need, they can't get from Amazon, or they can't get it in a timely manner from Amazon because maybe shipping delays. Walmart, let's just say Walmart has it. They can go to Walmart and get that because they are one of the few stores that are staying open. Now, again, if we go back and look at Walmart here on the daily chart over at WeTradeHQ.com, you can look and see how this is kind of been a very choppy market over the last several weeks, as it has been everywhere else. But what I would say is that if I look and see Walmart come down to the $100 range, or even as low as around $110, you can see these are definitely supports that are worth keeping an eye on, and potentially looking at these as very good buying opportunities, because as I stated before, from a fundamental standpoint, Walmart is doing extremely well in the midst of this crisis. And if there was a sector that I was going to hang my hat on or look to invest in during this time, it would definitely be something like Walmart, Costco, Dollar General, Dollar Tree, and these stores that have to stay open despite what's going on in our country right now and in the world. Okay, so the fourth stock that I'm looking at that I think could potentially be a really good bullish move right now and then moving out of the recession is Nike. It's expected to actually put earnings out tomorrow after hours, which is March 24th, depending on when you're watching this. And this will really paint us a great picture on what Nike looks like and what a lot of other companies might look like coming out of the earnings reports when they were shut down in China because of this disease. And so this is really going to be important and key and crucial. But I'm still very bullish on Nike despite what might come out of their earnings. And this might be something you may wait till after earnings comes out to take a look at and maybe look for potential buying opportunities, because despite Nike being one of the first retailers to announce closing at 384 stores in the US, Nike has demonstrated very impressive performance in prior recessions. This is simply because Nike sells good products, and good products still sell even in bad times. When you look at Nike as a whole, how long they've been in business, they've been through the 80s, they've been through the 90s, they've been through 2008. They still sell no matter what. And even if their sales are down compared to previous years, they won't completely go away. Right now, if Nike ends up having a poor earnings report and comes down, to me, that would definitely be a signal to buy something like Nike because of just how well they actually do through a recession. Now, if we take a look at Nike here on the chart over at WeTradeHQ.com, you can look and see how Nike hasn't seen these levels since late 2017, and it's showing a really good support right around $60 per share. Now, this might drop through this support depending on what earnings look like on Tuesday after hours, but in my opinion, I think that's going to be presenting itself with a really good opportunity. So if you look at this, I would say that even with poor earnings, that Nike would not go below $50 per share. Obviously, things can change. We don't know exactly what it's going to do or where the bottom will absolutely be, but it's really hard to imagine Nike going down below $50 per share. So I would say that this is definitely going to be a good opportunity to scoop up some Nike shares on the cheap and hold on to it as we move out of this recession, because Nike, in my opinion, will do very well out of this, as they have shown in previous recessions and other trying times. Okay, so the fifth and final stock that you should be taking a look at is Zoom. So if you guys aren't familiar with Zoom, Zoom is a telecommunication platform that I actually use personally in my everyday use, that I used well before all of this was happening. I love that platform. It's fantastic. It's easy to use. In most cases, it's actually free, but if you want to add more people to your conferencing over 45 minutes, it costs like $14.95 a month or something like that. Super cheap, but it's a really great platform for people looking to interact with each other virtually. And what better time to do that than if you are being forced to stay inside of your home. The cool thing about this is Zoom isn't just being used for work. It's being used for people to be able to communicate just as they would be communicating on the phone. Or people have been playing board games on Zoom. It's been a crazy time in our life, right? But all this does is increase demand for the company. And right now, as I'm speaking, it's trading at $130 per share. It's gone up as high as $160 per share as I'm recording this video. And I still think that it is on the cheap because, in my opinion, we are just starting to see shutdowns from state to state. And I think, in my opinion, that that's only going to increase. And as that increases, so will the demand for Zoom. And I think that Zoom is going to continue to climb up. Not only that, but the company has seen 6 positive estimate revisions in the last few weeks. And I think that we will actually be seeing more of that in the very immediate future. So looking at the daily chart here, you can actually see that it's kind of hard to read a little bit. But what I will say is that if it has a pullback anything below the 120s, in my opinion, that would signal a very strong buy indicator. And then if by some chance the absolute bottom comes in right around $100 flat, that also would indicate a strong buy signal for me as well to invest in this thing. Because as I've stated before, I think at this point in time, we are still very much in the beginning stages of this crisis. And what I would say is that as things continue to shut down, we will start to see a stronger demand for telecommunication services such as Zoom. And at this point in time, I think that we are seeing this still at a very cheap price as to what it can be. I think it gets beyond 160, maybe even goes to closer to that $200 range. So at this level, you could almost double your money. So those are my 5 stocks that I am watching that I will be looking to invest in even further as we go into and move out of a recession here that is inevitable, that is probably more than likely here. It's just that there has been no official word on that just yet, but I'm willing to put my neck on the line and saying that yes, we are here. I think it's pretty obvious that we are experiencing that. Okay, so now that I've listed the 5 stocks that I'm watching, are there other stocks and investments that we should be taking a look at during this time? Leave me some comments down below. Help some other viewers out as well. And I respond to every single one of the comments, so I would love to hear from you and get your thoughts and opinions on today's topic as well as things that you're watching as well. Lastly, I just want to invite you you to check out my morning mentorship where I go live with folks from 9 a.m. to 10 a.m. Eastern time. The links are down in the description below, and it's a great community to be a part of. I go over the stocks that I'm watching, how I plan to execute my trades and investing. I go live with folks every single day and show them my plan and how I plan to execute certain trades throughout the entire day. But then I'm also with them in a private chat group as well, and I'm available to answer any of the questions that they may have. It's a great community to be a part of, and I highly encourage you to go check that out. Again, links are down in the description below. I would love to see you there. And I would like to just say one final thing, folks. Please stay safe. Please take this seriously. I would love it if we could all come together and really kind of tackle this whole thing and really come out on top. And I think that we do. I would never bet against America, and I think that there definitely will be a light at the end of the tunnel. And as long as the stock market stays open, I will be here to help you own it. So, guys, as always, I will see you all before the bell, and B. Smith is out. Take care. So did Elon really lie to us, or was it just a matter of the situation that occurred after those earnings reports came out? Well, if you look at when Elon made that announcement that he